In the discussions, I've seen some questions regarding exercise 1120, which is about payroll. And I thought that the best way to approach those questions is to actually go through a very brief video showing how to solve it. And so I'm using the given information from your textbook, page 624. And so you see there exercise 1120. And it's asking you to complete a payroll register and then to do 4 journal entries. And so the given information is earnings, beginning cumulative earnings, current period earnings, and then we should fill out each of these columns here, the ending cumulative earnings, the OASDI, which is part of FICA, that's Social Security actually, and then Medicare. Now you see that the other withholdings or deductions we'll be taking are all given, so we're just going to use those for now. That will give us a total withholdings column in the spreadsheet. In a second I'll show you, and that will be calculated based on these 5 columns before it. And given that, we should have enough information to respond to these first 2. Actually, no. We have to do 2 more columns that I will actually add to the spreadsheet for this one, for journal entry number 2, which is item 3 here, and then we can finish off these after that. And so the answer you'll find is already in the let me change the color here. Let me use this one. Let's see if it's not too ugly. So I'm using the Excel spreadsheet that is already inside of your module for this week, actually for last week, for week 11, I mean for chapter 11. And there you see there's a spreadsheet that shows you the same answer here as I'm looking at, as you're looking at here in the screen. But I added some things to it. I added this little section here with the employee numbers just to be able to keep track of each of those line items separately. I also added some other info that basically comes from the book. We know there's a limit that applies to Social Security, so that's when I have that there. Here's the Social Security tax that applies for earnings up to a certain limit, which is this limit here. There's the rate for Medicare. Then, as I said before in the previous from the book, you have these other amounts that are actually given. So that's the G there. And then, as I said before, I added 2 more columns to the answer key in your module to reflect the unemployment taxes, the FUTA and SUTA, federal and state. And as you might already have seen in your book, the rate is 0.006 for FUTA and 0.054 or 5.4% for state. So given all of that, let's just get right into it. The amounts here, I'm not gonna just read them off. You know where they come from. They come from directly from the textbook as a given. Same thing with the current earnings. And here is simply the addition of this column with this other column, and that gives you the cumulative. Now this only becomes really relevant to us when these amounts are getting near the limit of 118,500. And so as you'll see in a bit, it only really applies to this. That's the only reason really we're doing this column. So I'm going to come back to these 2 columns in a second. So let me just give you the income taxes. Again, 900 for employee 1, and it comes directly from there. And the other numbers also are coming from the same source. So it's all given, as I said before. Similar with health insurance, and similar with United Way. And so in total, you've got these overall totals for each of those withholdings in the paychecks for each of these employees. And remember that we're looking at gross pay here minus these withholdings to get to this, to this net pay amount. And so you will do that, on your own and sort of make sure that these actually agree to what I just said. Again, gross earnings minus total withholdings equals your net pay. It's getting a little messy, so let me take these out to not have all of these in front of us. Let's see. All right. So then, how do we get these numbers for Social Security? We know it's 6.2% for all earnings for a calendar year per employee up to this point in time. So the previous $77,000 for employee 1 have already been taxed previously in different checks. So in this period, the question is how much of this check is actually still subject to Social Security. Well, we look at the overall earnings for employee 1, and we know that even when we include the current check of $4,500, the total cumulative earnings are still below $118, so we don't worry about the limit in this case. So we simply apply the 6.2% times the earnings of $4,005, and that's how we get $279. I'm going to skip over this one for a second, and I'm going to go to the third, employee number 3. Same thing with employee number 3, where their previous cumulative earnings plus the current check is well below the limit of 118, so the full check of $3,300 it's subject to the 6.2% Social Security tax, and that gives you this amount there. Same with employee 4, and same with employee 5. The employee 5 just started working, so that's their first paycheck, and so the full amount is well below the limit of $118,500. So that means again that the full check here is subject to the 6.2%. So that's how you get to $279 right there. So how about the second one? I mean by that I mean employee number 2. In employee number 2, what you're doing is you're saying, well, we know that they're actually, with this paycheck, they're over the limit. The question is by how much? I'll tell you now that they are over the limit by about $700. That means that from this check here, the current check, anything below a certain amount is still subject to the Social Security tax. Anything above a certain amount is no longer subject to that tax. How do we figure out what that is? So there are two ways. The book does it this way. The book says, give me the limit, which is $118,500. Give me the prior period cumulative earnings before this current paycheck is $112. So how much of it is left that is still under this limit? Well, you take the difference, and that was how you get to that $6,500, which is still subject to the 6.2% Social Security tax. And if you multiply it out, you get to the 403. So that's how they get to this 403. A slightly different way to get to that same result, and you can do it either way, is by doing similar. You take the 112, the initial 112 prior cumulative earnings. You add the full current paycheck to get to the overall total cumulative up to this point, and you get to 119,200, which obviously you have here again. It's the same thing. And then you say, how much do I need to reduce this by to get to 118,500? Well, 700. And the difference between 700 and the check itself, that's how much you actually have, that's how much is subject to the Social Security tax. So either way, you can actually figure out what is the amount of the check, of the current check, that is still subject to the Social Security tax. And in this case, 403, so for a total of $1,370.20 Social Security tax for this period for all employees. Medicare is easier. You just simply apply the 1.45% to all earnings. So the earnings for each check for all employees is subject to the tax. Keep in mind there's a new rule recently that if an employee earns over a certain limit, in this case we're talking about something around $250,000 for married couples and $200,000 for singles, but that's on the tax side. we don't discuss that here. There's some kind of surcharge for Medicare, but for now, we just sort of do the basics here. So the overall total for Medicare will be $330. And so now you're ready to come up with the total withholdings for each of these employees. Simply add up all of the columns here for each employee, and you're set. That's how you get to the total withholdings. And now you're ready to go and do the current period earnings, which is a gross pay for each employee, minus the total withholdings, will give you the net pay. Now that when you're done with this, you're able to then do the first journal entry here, the one that they're asking you to do here in item number 2. That's the accrual for wages expense. So what you're going to be debiting the expense account, salaries and wages, for the total gross pay, which just comes from there. Let me change color to make it a little easier to see. I don't know which one. Which should I choose? I'll use blue. So here it is. That number, the wages expense number, debit, comes from the total current earnings, or gross pay. The employee income tax payable comes from the income tax column for all the employees, $4,650. That's a credit because it's a payable. This amount of money will be actually withheld from the paychecks of the employees and then remitted and sent to the IRS at some point in the next period, or in the next month probably. The Social Security agency will get also some money a few days later. So for now, you set it up as a payable in the books of the company, similar with Medicare. And then there's also some kind of insurance company that will get some kind of money from the company. But remember that these are withholdings from the employee's earnings, so it's a payable for now. United Ways, these are voluntary withholdings from some employees, and again, you withhold them from the employee's paycheck, and then you remit it to United Way at some point in the near future, and that in the net of that. And by the way, obviously here are the amounts that you need to place here in these credits. And then finally, the overall net pay there will be the net, the remaining. That's how much you're going to be sending to your employees via a check. So that takes care of requirement number 3. I'm sorry, no, number 2. And let's talk about number 4 right now. So we can skip number 3 for now and come back to it in a second. So if you go and look at 4, what we're doing here now is recognizing the payment, the actual payment. So going back here, we're just looking at this part of this journal entry and saying we're sending the cash we're actually sending the check, so the cash out. Remember that in accounting terms, when we say payment of earnings to our employees, we're actually sending out checks, but to us, checks are actually now cash. So that's the reason we have a credit to cash for that amount seen here. And remember that this was a payable. So in paying this amount, now you can eliminate this payable with a debit. So that's how you take care of 4, requirement 4. So how about the FUTA? FUTA is similar to what we did with Medicare. But in this case, it doesn't come from the earnings of your employees. In this case, instead, this is the company paying for these taxes. So we're going to be taking 0.006, meaning about less than 1%, 0.06 of 1%. And so we're going to multiply the earnings up to $7,000 for the year, and applying this federal tax, unemployment tax rate. But remember that the cumulative earnings already before this paycheck for the first 4 employees was well over $7,000 already. So they've already paid off all of, at least the employer has paid off employees 1 through 4 FUTA and SUTA previous to this paycheck. So they are already over the limit, so we don't have to worry about paying anything else for these 4. The only one that is brand new is this one. And so that's the reason we have $4,500 times 0.006, and that gives you $27 as what's now due to the government as unemployment insurance for the federal government, actually. And then on the state side, similarly, it's this 4,500 times 5.4%, and that's how you get to 243. And if you go now and generalize the payroll tax expense, here you see these two. Is the federal unemployment tax payable, 27, state tax pay unemployment taxes payable, 243, and then there's also the matching part of Social Security and Medicare by the employer. Because going back here, remember that we had this amount for Social Security from withholdings from the employee's paychecks, and also for Medicare. That the law says that the employer also has to match that 1-to-1. So you also have the same amounts appear on the employer's side of things. So once you add up all of these four, that's how much you then have to debit the payroll tax expense for. And then once you have these payables in place, eventually you're going to pay them off. And so you're going to pay off not just simply the, here's the FUTA, here's the SUTA, here's the United Way, health insurance, but these two also reflect both parts, both the match by the employer and the withholdings from the employee. And finally, there's also income taxes that you're going to pay off, so you get rid of that payable as well, and the overall total of actually cash paid out is this much. And this is how you take care of 1120. Hopefully that was helpful. Take care. Bye-bye.